Good afternoon, everyone, and a warm welcome to Digispice Technologies Limited Q2 and H1FY22 Earnings Zoom Seminar. We have with us today Mr. Dilip Modi, the Chairman of Digispice Technologies Limited, along with members of the senior management team. Before we begin, I would like to state that some statements made in today's discussions may be forward-looking in nature. The actual results may vary as they are dependent on several external factors. A statement in this regard has been included in the result presentation sent to you earlier. We will commence the call with Mr. Dilip Modi taking you through the operational and financial performance for the period under review, following which we will have an interactive Q&A session. I would now like to invite Mr. Modi to commence the presentation. Over to you, Mr. Modi. Over to you, Dilip.
Thank you, Gavin. Good afternoon, everyone. Thank you so much for taking out the time to join us on the Q2 earnings call for Digispice Technologies. I'm very aware that there are many calls happening, earning calls happening by different companies. So thank you so much for taking out the time to join us on this call. We will try and make sure that we can use your time today to not only give you an understanding of how this quarter has gone, but also further in-depth understanding of our business model, introduce you to members of our management team, as well as answer some of your specific questions that you may have on the business. So thank you once again. Let me start my presentation. So friends, today we are going to talk about our Q2 earnings that we published following our board meeting for this quarter. Can we move to the table of contents, please? So we've broken the presentation into broadly 5 sections. I will give you a quick update on the highlights for Q2. Followed by which we will have the respective teams talk about the 2 business segments, the fintech business as well as the digital technology business and the consolidated financials. What we have done this time is that a lot of the slides on the business introduction, the business model, we've put in the annexures for your ready reference. This was basically to optimize the time that we have here together. All of this has been uploaded on the website as well as on the stock exchange. So all of you have the opportunity to go through it. If there are any questions on any of the slides, the annexures, please do not hesitate to ask us on the call. So straight away getting into the update on the Q2 highlights, please. So let me begin the presentation by just sharing with you broad highlights for the Q2 of this financial year. Let me start with the fintech business, Spice Money. As we've been sharing with you in our last few earning calls, we have at Spice Money adopted a flywheel strategy of growth, where our focus as a platform business is to drive transactions on our platform. We do that by onboarding merchants and entrepreneurs in rural India and semi-urban India, who we refer to as Spice Money Adhikaris on our platform. They help us drive customer transactions on the platform, which help give data, which allow us to do product innovation, bring new products, which again drive earnings for our merchants and Adhikaris and drive growth of the transactions on the platform. So it is this focus on the flywheel strategy of growth that we are continuing to be on. As some of you who may have been on the previous calls will recall, that in Q4 last year, we made a significant shift in our revenue model, where we moved from predominantly a subscriptions and a rental model to more a transactions-based business model. It is this shift in the last quarter of the financial year that we believe has contributed significantly to our accelerated entrepreneur-based growth in Q1 and Q2 this year. I'm happy to report to all of you that as of the end of Q2 of this financial year, we have crossed 800,000 in our merchant Adhikari base on our platform. This was an addition of close to 119,000 Adhikaris on our platform for the quarter. And over the last 1 year, we have added over 400,000 Adhikaris on our platform. In terms of repeat customers that have transacted on our core product, which is Aadhaar-enabled payment system, this number grew to 25 million customers during Q1 compared to 21 million in Q1 and 17 million same quarter last year. The gross transaction value that we registered on our platform during the quarter was close to 32,500 crores. From this quarter onwards, we are doing a further split for you to give a better appreciation of what all is part of the gross transaction value, basically breaking it down between customer gross transaction value and entrepreneur gross transaction value. Vivek from the Spice Money team will talk to you further about that during the course of the presentation. For this quarter, the customer GTV grew 9% quarter on quarter and 81% year on year. We in our fintech business are very excited about the long-term growth opportunity and potential in rural India, and therefore we continue to focus our investments towards capacity and capability build out, specifically in the three key areas of brand, technology, and organization. And Sanjeev from Spice Money team will talk to you further about that. During this quarter, we launched our new rural travel tech platform, Travel Union. Again, this is early days, but we have begun to see good traction as the country is opening up and travel is happening. We are just in time in terms of a platform meant for rural agents working in semi-urban and rural India. We also announced during the course of the quarter a new joint venture that we've entered into with Taria Group, which is a leading digital community lending platform from Israel. They are one of the leaders in the lendtech space in Israel with a significant market share. Again, Sanjeev will touch on it. Both these initiatives of travel tech and lendtech were a part of our journey towards building exciting solutions in areas that we believe have significant growth opportunities in rural India. One of the key focus areas for us at Spice Money, and this quarter we saw some significant steps towards that, is to make sure that we continue to build a great purpose-driven organization. Our focus, we are a people-driven business, and therefore it's very important that we continue to build the right culture within the company as we build out to solve problems in rural India. I'm very happy to report that during this quarter, we got certified as a great place to work at Spice Money. This was a 3-month process that we went through with the institute, and I'm very happy to share with you that now Spice Money has been certified as a great place to work. In our digital technologies business, as you're aware, we've been building out two new areas. One is in the communication platform as a service business, in which we rolled out our new business line called Corero Platforms. And with our telco footprint, we continue to focus on building digital telco solutions. Again, we are at an early stage in the build out of both these platforms. And as we move forward over the next few quarters, we'll be able to share with you in more detail. Let me straight away jump into the fintech business and talk to you about the team now that we have in place who's building out this business for us at Spice Money. Can we move to the next slide, please? So friends, again, I'm very happy to share with you that now, we are building out a very strong management team for our fintech business, Spice Money, where we've brought in members with great expertise and experience, both at an advisory board level as well as at a management team level. Before I invite Sanjeev to share with you more about the team, let me also inform you that we have two very experienced advisory board members who are working very closely with us. One is Mr. Ramesh Venkatraman, who's had tremendous background in consulting and investments. And he's advising us in terms of our journey at Spice Money, how to build a leading fintech business for rural India. And we also have Mr. Abe Aima, who's a banking veteran from HDFC Bank, who's also an advisory board member, working again very closely with us at the management team to guide us on how do we make sure that we build a strong, robust business going forward. With this, I'd like to invite Sanjeev, who's the Chief Executive Officer for Spice Money, to please introduce the management team to all of you. Over to you, Sanjeev.
Thank you, Dilip. Good evening, everyone. Thank you for joining in. Like Dilip said, we're building a very, very professional management team at Spice Money. We're very, very proud of it. Today, in this call, I'm joined with three senior colleagues. Rajneesh, who heads, he's the Chief Innovation and Strategy Officer. Sunil, he's the Executive Director at the Board of Spice Money. And Vivek Venkatesan, who's the Chief Financial Officer, who's also going to speak about the numbers. Next slide, please. Like Dilip said, we are very bullish on rural India. And we are very well poised to be the most admired fintech brand in rural India. This is a mission that we carry. And the 7 building blocks that we are building to achieve this mission is, first of them is network. We're building the largest distribution network in rural India. We're already over 8 lakh adhikaris coverage across all districts. Platform, robust and scalable tech platform with a microservices based open API architecture, which is scalable. Product, we're building the largest product marketplace for 1 billion consumer. Brand, very important role in India. You need to gain trust, and that is something that we're very, very passionately building, a trusted brand for rural India. A strong management team, like you would have seen in the last slide, and many people were not part of that slide, but as senior management members, a strong management team with people who have experienced very, very strong pedigree in various organizations that they worked with, but driven by a professional entrepreneurship culture. At the end, the purpose is very purpose-driven to transform rural India. Our business model, it's a very asset-light business model with positive unit economics, and we continue to build that. Performance track record, extremely proud to say we have a very, very strong performance in business and financial performance over the last 6 quarters, which which has given us the confidence to scale this business in a big way. Nehal, next slide, please. You would have seen this slide earlier in the previous presentations, but I continue to say our core strategy business model revolves around building a fiscal super app. What does this mean? We're putting a consumer at the center, rural consumer, and we are saying, can I service all his needs using technology and through entrepreneurs who are based in rural India through a community-led platform? So basic banking, basic payments, financial services, all services. If I can get all those services on the platform, and if I can build a network of entrepreneurs across every district, gram panchayat, block, gram panchayat, then why does a rural consumer have to step out of the village? Next slide, please. In the same, continue with the same momentum, like we said, we're coming out with 2 new product platforms and organizations. One is Travel Union. We're launching the first of its kind, a rural travel super aggregator for travel agents. We're democratizing travel in rural India. Very early days, but I'm sure we'll speak more in the further presentations over the next few quarters. The next and very, very recent business model, go back, Nehal, please. Last slide. This next business, we're very, again, product very passionate about, very important need, is building a community-led rural lending model. We've had tied up with Taria. Taria is the #1 P2P banking platform in Israel with a 70% market share. Proudly associated with as 2 organizations. We've named our organization Vikasni FinTech, and I'm sure over the next few quarters, you're going to see a lot of numbers and performance on these 2 new product lines for us. Nehal. Now I'm going to request Vivek, who's our CFO. He'll take us through the key metrics across business and financial performance. Vivek, over to you.
Thanks, Sanjeev. So I get good afternoon to everyone. It gives me great pleasure in presenting the Q2 performance of Spice Money. I'm going to walk through a few operating and financial metrics which have underpinned the performance, of our Q2 21-22. Needless to say, we've continued with our momentum in the last quarter and delivered very strong operating and financial performance. So on the first slide, I want to talk about a few key metrics. Some of these metrics have also been presented in the previous quarters and some are new, and I'll want to take some time in explaining the new metrics. So the first one, I guess Dilip and Sanjeev have already talked about this. The zero cost subscription campaign, which we built out in from Q1 of this year, has continued to yield momentum in our Adhikari growth base, and we've almost delivered a 17% growth quarter on quarter on the number of Adhikaris, ending with 8 lakhs by the end of this quarter. And our market share of our core product, which is AEPS, continues to be robust. We've seen a steady increase. We've closed H1 at a strong market share of almost 15.8%. There's a significant increase from where we ended the last financial year. And the last metric, while this has been presented at a total level, I want to spend some time on this. If you look at it, our overall gross transaction value has increased from 31.1 crores to 32.5 crores. However, in this entire, gross transaction value, there are two blocks. One is the customer GTV and the second is the entrepreneur GTV. And I explain a few about all these terms. Gross transaction value in our line of business and the way we've been representing our operating, performance is actually refers to all the transactions which generate revenue for us, either from the customer or from the agent. Now, the gross transaction value is split into two. One is the customer GTV, which primarily is the value of transactions done by the customers through our entrepreneurs. And this is primarily the driver of our financial performance and service fee. Entrepreneur GTV refers to the value of transactions which the agent does on our network. This is largely in cases, primarily this is when the agent wants to move excess funds that is remaining in his wallet to his bank account. So this is largely the entrepreneur GTV. And the reason why we want to, show this distinction is that we want to stress upon the fact that the primary, the driver of performance for us is actually the customer GTV, which has recorded a strong 9% growth, quarter on quarter. We'll talk about more in terms of financial performance in the subsequent slides. Nehal, next slide, please. So again, this was a slide we presented last time. I think the key thing to note here is that the upward trajectory, both in Adhikari numbers and service revenue, continues to be pretty strong. So as we spoke some time back, we've ended with about 8 lakh Adhikaris. And most importantly, our service fee revenue has grown from 69 crores from the last quarter to 80 crores this quarter. So the key thing to note here is that while we launched the free subscription campaign towards end of Q4 last year, we've seen momentum. It's been it's seen a very positive response from our Adhikari base, and that has led to primarily the increase in the Adhikari base quarter on quarter, and the momentum continues. The second important thing to really focus here is that our service fee revenue has seen double-digit growth over the last 6 quarters. So this is a very fundamental metric which drives our performance, and it clearly underpins all the efforts taken by the team and the investments we made, and clearly it is showing the results. Nehal, next slide, please. So again, like what Sanjeev discussed about 3-4 slides back, the core of our business remains to be the rural customer, right? And all our offerings through our agent network right now are towards meeting the needs of the rural customer. And we've seen huge traffic from the rural customers, and we've seen the repeat customers on our platform growing quarter on quarter steadily. And this quarter was not an exception. The same level of growth we recorded between Q4 to Q1, we recorded this quarter also. The repeat customer base who transacted through our platform stands at 25 million, which is very significant. As we build out our franchise to be more rural focused and focused on the rural customers, we see a lot of traction from this base, and we will focus on tailoring our offerings to our loyal customer base. Nehal, next slide, please. So I want to spend some time on this slide. This is a new slide which we've introduced. I think in this one slide, basically we've captured the entire operating and financial performance. And this slide also clearly reads out the business model and operating model for whoever is saying this. So really at the top of the tree is the customer GTV, which I explained a couple of slides back. Is actually the value of transactions which the customer does through our Adhikari platform. We witnessed a significant growth, QOQ 9%, YOY 81%. Then in terms of revenue, while at an overall level, the revenue, is at the growth is witnessed is about 0.4% QOQ. The key thing to note here is that the service revenue, which basically drives our financial performance, has grown 16% quarter on quarter and 82% year on year. And this primarily drives our gross margins as well. The airtime revenue has witnessed a bit of a shortfall, but then in terms of margins, this does not impact financial performance significantly. And the third thing is the subscription and device revenue, has held to its levels and has slightly increased from the previous quarter. But the focus for us on this entire revenue stream is that we are clearly moving from a zero subscription model to a service fee revenue model, which is pretty much reflected in the results. And in terms of gross margin, if you really look at it, the gross margin from service fee has increased by 23% quarter on quarter and 66% year on year. And if you look at it, an overall gross margin of 29 crores for the quarter, service fee contributes 27 crores. So it's very clearly a reflection of the focus area for us, and this drives our margins primarily. And so clearly, if you look at it, in terms of trend, the customer GTV increase has led to an increase in service revenue, fee revenue, and service fee revenue has increased, led to an increase in service fee margins also. And if you look at it, there's a clear linear progression from 9% to 16% to 23% quarter on quarter, which very, very clearly validates our business model and also clearly validates the fact that we've been investing in the right areas and driving the business according to the focus areas. Indirect cost witnessed, a marginal growth in terms of by about 10% quarter on quarter. But clearly, I think the increase in indirect costs is much lower compared to the gross margin increase, which clearly gives us a positive jaws. And the indirect cost, increase was in line with expectations. We are continuing to invest in our, the brand, organization, and tech, which are key levers to run a successful fintech business. And we will continue to invest on this, but then but also ensure that we have the right level of operating leverage to be able to sustain this business model. And at the end, we have three metrics, which again is a clear reflection of our business model. One is the service fee revenue to customer GTV. This is basically nothing but the margin or the total gross revenue we earn on customer GTV, which is at a healthy 41%, has remained, and it has increased by around 2 basis points quarter on quarter. And the service fee gross margin actually also has witnessed an increase by around 12 to 14%. Quarter on quarter, again, reflection on the fact that we focus on our operating leverage. This has been driven by improved, supplier margins, and also the fact that we've been able to get the operating costs down. And finally, if you look at it, the service fee gross margin as a percentage of service fee revenue is almost, 33%. And this has increased by 2% quarter on quarter. Again, a very clear reflection of the strong business model with significant operating leverage. This gives us a lot of confidence to further invest in this business, achieve our goal of being able to serve the rural customers, and also invest very sensibly in terms of building our capabilities. And finally, before we go to the next slide, again, bottom line, EBITDA, we've grown from 4 crores to 7 crores with an increase of almost 95%, and EBIT, which has increased from around 5 crores to 9 crores. So here I want to highlight that EBIT also includes, EBIT includes the interest income, that we make from the prepaid balances, which the Adhikaris keep with us. And if you really look at it, the EBIT has also grown. One of the reasons is that we've got the Adhikaris more sticky to a platform. They've been able to retain more balances in our platform, and that's reflected in the increase on EBDT from 5 crores to 9 crores quarter on quarter. Next slide, please. So for now, I'll hand it over to our chairman, Mr. Dilip Modi, to give an overview of the digital technology business and introduce the respective teams.
Thank you, Vivek. So coming to our second segment, the digital technology business, we have two platform businesses we operate under this. One is Corero Platforms, which is basically a communication platform as a service segment. And the second is our digital telco platforms for telcos in the region. I would also like to use this opportunity to introduce the management team that is driving this business on a day-to-day basis. We have two of them joining us on this call today. One is Mr. Rohit Ahuja, who's the Executive Director on the board of the company, and Vinit Kishore, who's the Chief Financial Officer. We also have the other members, Anuj Malhotra, who's the Chief Business Officer for Corero Platforms, comes with a significant background in the CPaaS industry, and Sandeep Kaushal, again, a veteran in the platform technology side of the business, who's heading technology and product for us at Corero Platforms. Vishal Gupta is the Chief Business Officer for our digital telco business, comes with, again, a background from Mahindra Comviva, working extensively with telcos in the region. And Prashant, who again has tremendous telco tech background, heading technology and product, and joined by Lakwinder, who heads HR and admin. So like in our fintech business, even in our digital technologies business, we are leading with experience and expertise, and we are making sure that each of the verticals are housed with the right leaders with the right background and experience. I would like to now invite Vinit, who's the Chief Financial Officer for Digispice Technologies, to both run us through some of the key metrics for the Digispice business segment and also close with the key highlights for the Digispice consolidated financials. Vinit, over to you, please.
Yeah, good evening to all. It's a nice opportunity to get interaction done. Nehal, can you go to the next slide? Just expand it. Okay. So, this is better. So, as conveyed earlier, this business, we are focusing primarily on enterprise business, digital telco, and analog telco, which is also called telco VAS business. In enterprise business, our revenue has grown up by 47%, which is a very happy quarter that way for us. Our digital telco business has also grown up. It has been growing. This quarter, it has grown 27%. These are the two focus area for us, and going forward also, we'll continue to focus on them. The traditional VAS business is degrowing, and that's an industry level. That industry itself is degrowing that way, and focus is coming on digital telco only. So that way, our revenue growth this quarter has been quite decent and encouraging for all of us. At an EBITDA level, the EBITDA has also improved compared to quarter one last quarter, and if you compare same quarter last year also, we have improved. The growth in the enterprise business has helped us in improving our margins this quarter, and we continue to believe that the trend should continue. So that's how we have performed on a quarter-on-quarter basis at a Digispice level. Nehal, can you go to the next slide? At a consolidated level, at a group company level, we have also shown an improvement in margin at both Spice Money and Digispice. So our revenue overall has grown up by 3%. The overall growth has been driven by both Digispice and Spice Money. The EBITDA has also improved at a console level, and typically our EBITDA is around 3% of our top line, which the ratio has been maintained this quarter. And our improvement in EBITDA has also helped in improving the PAT. If you compare quarter one, our PAT has gone up by close to 6 crores, and we end up 4 crores for this quarter. So the PAT same quarter last year was a bit high because we had sold one of our associates. And otherwise, the performance this quarter has been reasonably encouraging for all of us at a company level. Thanks. Nehal, next slide, please. With this, I go back to our moderator, Mr. Gavin, and we are all available for any Q&A which you might be posing on us.
Yeah, thank you, Vinit. I just request Dilip to just briefly introduce the management, and then we go into Q&As, please. Yes.
Yeah. Thanks. Thanks, Kevin. Friends, thank you once again for joining and your attention on this call. To introduce you to the team available on this call. So, of course, we have Sanjeev and Vivek, from Spice Money, but also joined by Rajneesh and Sunil. Rajneesh, in addition to innovation and strategy, is also driving investor relations, for us at Digispice Technologies. Sunil is, of course, the executive director on the board with Spice Money. And Rohit is the executive director on the board of Digispice Technologies, joined by Vinit, who's the CFO for Digispice Technologies. So we have some of the core team members. Of course, we have a much larger team and an organization behind this team, building the business on a day-to-day basis. And we'd love to, engage with you and answer any questions that you have on this call, or even later, if you have any questions, please do reach out to us through our website and our contacts. Over to you, Gavin, please.
Thank you, Dilip. So we'd request, we now open the floor for Q&As. I'd request people, those in the audience, participants, to please either raise your hand or place a question, or place a question in the chat. If you could raise your hand, and we'd be happy to take questions, questions immediately. Thank you. We just wait a moment. Okay. If I may start with Rahul Jain. Rahul, can you, if you could please unmute yourself and ask your question?
Sure. Is my line audible to you guys?
Yes. Yes, Rahul, we can hear you. Rahul is from Dolat Cap.
Yeah, hi. Thank you guys for the detailed presentation. Firstly, on this product on the travel side, what I wanted to understand is that how we plan to, do the marketing for this, how we plan to make it reach to, the said market that we want to target on this, and what kind of budget would be required to make the kind of headcount we want to target.
Okay, Sanjeev, you just want to talk broadly about the travel union, direction and strategy that we are chasing, and of course the budgets and all, Rahul. We will further detail as we go out. We have just about rolled out the platform last quarter, Rahul, but I'll have Sanjeev talk to you about what's exciting us about this travel opportunity and how we are rolling out the platform. Sanjeev?
Yeah, thanks. So Rahul, thank you so much for the question. Early days for us, but like Dilip said, we are focused on building the platform. We believe that there is a very big untapped opportunity in rural India, in a rural consumer getting access to basic travel services at his doorstep. That is what we are building. We'll obviously utilize we'll use different modes of distribution to reach out to building this franchise, but very early days, Rahul, on money, on our strategy. So we continue to remain invested in building this organization. Maybe in the next few quarters, I think we'll speak more on the numbers.
Okay. Okay, got it. And on the in general, what are the plans since we have much strong growth aspiration? So, what kind of investment, both in terms of capex as well as marketing spend, that we have envisaged over this year and next year?
Yeah. So Rahul, you're talking basically around Spice Money, I would imagine, Rahul?
Yes, maybe across the business also.
Yeah. Okay. So Rahul, as you see, of course, the Spice Money fintech business, the growth that we've seen has been through a significantly distribution-led strategy. So we have distribution partners in every state and every district of India, who work actively to help us onboard entrepreneurs onto our platform. And as the platform has scaled in terms of products and transactions, especially in the last 2 quarters, we've seen a growth in the number of entrepreneurs that have come on our platform. So in terms of marketing, Rahul, we are basically, in the case of Spice Money, very product and channel and kind of distribution partner led acquisition strategy. Of course, our goal is to build trusted brands in the rural ecosystem. So through our digital platforms, both on app and web, we continue to engage with our entrepreneurs, both on the financial side as well as now going forward on the travel business side, to be able to engage with them, to share with them around our product and what are the new features that we are bringing and the new services that we are launching. So we continue to have a very strong digital engagement program with all our entrepreneurs that are onboarded on our platform. As far as the enterprise mobility platforms are concerned, like Corero, again, I think here we are more focused on direct sales force toward enterprises, and we are beginning now going forward to also look at digital marketing as a way, as we get feedback on our product and both product and market, we are able to get some fits around new segments that we can chase with our CPaaS platform. We will be investing in digital marketing to build out traction for the platform going forward. So as of now, Rahul, our strategy on the marketing side is more product and channel led. We will see as we get more visibility to digital marketing channels. We will plan investments and then call them out in our financials as we go forward.
Okay, just last bit on the digital marketing side, what you said is it more would be around branding, or this would be more about conversion or programmatic kind of a spend that we plan to do here?
Rajneesh, you want to talk a bit about our digital marketing thought process?
Yeah, so we've been actively, also engaging in, basically digital marketing initiatives to get adhikaris onboarded directly. So we have a product where an adhikari can come onto the app and get completely self-onboarded to the platform. And we've seen that some channels of digital marketing have really worked for us in the past. I would call them more as pilots, but we definitely intend to scale them up as we move forward. So, as a trend, we've seen a very healthy and growing trend of more and more adhikaris discovering Spice Money, coming onto the platform and self-onboarding them.
Got it. Thank you. That's it from my side. And best of luck for the time.
Thank you, Rahul.
Thank you, Rahul. We can take the next question from someone named I am Chiku. If you could please introduce yourself and share a question. Yeah.
Hello.
Yeah. Yes. Could you please
Am I audible?
Yeah, you are. Yes.
Hello. So my name is Chiku, and this is my first such event in my life. So please pardon me for any mistake. So I want to ask one question for in respect of Spice Money. Sir, I just heard the news about Spice Money that you guys want to raise PE investment.
Yes, Chiku, is your question that are we raising private investment? Is that the question?
Yes, sir.
Okay. No, Chiku, there are no formal fundraising plans we've announced as of now. We continue to, because we are a positive unit economics business, and as you can see from the numbers, we are generating profits in our Spice Money business. We continue to reinvest the earnings in terms of further growth. Having said that, I think as soon as we have any formal plans to raise capital, we will definitely share information regarding that and make it publicly available. So, but as of now, we have not announced any formal plans for fundraising.
Okay, thank you, sir.
Thank you.
Thank you, Chiku. The next question, if we could take from Rishu Dhawan, I'm sorry. Yeah, Rishu.
Hi. Hi, good afternoon, everyone. First of all, congratulations all for the brilliant results. I have a couple of questions. My first question is with respect to the Spice Money. Who is our nearest competitor, if is any listed competitor whose business model is pretty close to what we have with the Spice Money? That is my first question. Then, like we have around 16% of the market share. Who is the actually leader in the rural fintech in that terms, in terms of the market share? Then I have another question with respect to the share price. Like from the last couple of quarters, our company is doing brilliantly well, but share price is moving in the opposite direction. Going by the disclosure of MediaTek a couple of months ago, seems like they are on the selling spree. To me, it seems to be an overhang. Are we doing anything to address that problem? Maybe, are they looking for complete exit, and are we looking forward to facilitate their exit in one go so that it brings some positivity among the shareholders? Thank you.
Thank you, Rishu. Thank you for your questions. So just in terms of, let me take them one by one. So just in terms of our nearest competitor, Rishu, of course, we have mainly competitors in the private domain. I don't think any of our competitors really are listed. But just to share with you, we have competition both at a national and regional level. At the national level, maybe I would call out, a player like Pay Nearby Technologies, which is our nearest competitor with a similar business model as ours. There are others as well, but then they are different, focused on different regions of India. So I think I would say that Pay Nearby Technologies is our nearest competitor with a similar business model. In terms of our 16% market share, Rishu, actually, we have now become the leader in the APS segment. So we have, according to our understanding, the larger part of the market share in the market. Of course, the industry is fairly fragmented, and our goal is to consolidate the industry in the APS segment. To your third question on share price movement, Rishu, of course, as a public listed company, we have many shareholders, and as a company, we do not comment on any particular shareholder buying or selling shares. So that is the decision of the shareholder. Our view, Rishu, though, is that we are building out a long-term valuable business. In all our presentations, we are calling out the fact that we see a long-term opportunity in rural India, and as rural India goes digital, and as rural India is looking for more and more services that can be brought through the digital platform closer to their doorstep, we are investing in ensuring that we become the preferred choice for them to consume services digitally. So in this journey, we are continuing to build out the business, and as our management team, that's our focus. And now with this engagement process, we've started sharing how our business model is performing and more details on the business model as we get feedback, every quarter. So that's our focus, Rishu. We as a management team are effectively just focused on building out the business, and we hope that it will reflect in us helping meet a lot of the needs of consumers in rural India. So that's our focus.
Thank you. All the best.
Thank you, sir.
Thank you, Rishu. If you could take the next question from Navina CK. Navina, could you please go ahead?
Yeah, am I audible?
Yes. Yes, you are.
Yeah. Hi, Dilip. I met you in 2017, I think, after the AGM in Delhi. So, my question primarily is about the shareholding. See, from the last 7 years or so, the investors have not been really rewarded in Digispice. If you look at the NSE or BSE also, they've all given a good investor returns, but there seems to be a lot of indifference when management as far as the share price is concerned. And also recently there were complaints raised against the Digispice, and the NSE and BSE put the shares on hold. Many brokerages had stopped giving that opportunity to trade in the Digispice prep. Man, looks like, and also I think very well that 95% of the shareholding is by very few hands. So that gives a sort of volatility to the existing shareholders. And every day, if you see 5,000, 6,000 shares being traded in the market, I mean, it's so volatile that, you can't even sell. I mean, it's so kind of, I think you're not properly attending to the shareholders' concerns. So what are you thinking about it? How do you want to address this?
Yeah. So, Lavina, thank you. So I think, for us, Lavina, as you can see, at Digispice Technologies, earlier, we've been a listed company for a long period. And as you're aware, we've been working in multiple areas and industries. But now we've, tried to pivot the company more towards a rural fintech business. So, of course, Lavina, over the years, there has been, the underlying business that we've been doing have been under pressure. Especially earlier, we were in the mobile hardware space, and with the competition from China and the hardware industry from China, the impact that it had on our business was very clearly visible for all the Indian brands. So, our pivot from a hardware to a services to a platform business is really what we've been working on over the last 3 to 5 years, Lavina, because at the end of the day, the underlying value, the value of the business and our ability to give returns to shareholders, is a function of the underlying business that we do. And I totally understand where you're coming from. And
if we could just be, if you could please mute their lines, please. There is.
Hello.
Yeah.
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 So Navina, I can fully appreciate and understand because it has shareholders of Digispice Technologies have had to be very patient in terms of returns because of the duration involved. All I can say is that we continue to be focused to make sure that we make the underlying business very strong and robust. And so that is our goal, Navina, because in order to give returns to our shareholders, we have to make sure that we are running very fundamentally sound and strong businesses in segments that are growing. And I think the space that we've called out now, which is the digital platform space, is definitely something that we believe is the right industry at this point, given the opportunity that we've seen on growing digitization across the board. So all I would say is that we are now in an industry which is offering a lot of opportunity for growth and also healthy financial robustness. So that is what we will focus on. Of course, things like share price performance and all will all be a function of how people see our underlying performance and decide on that. In terms of Navina, that you spoke about the BSE and NSE, putting us in a certain category following some issues with respect to SMS messages that were going around. This is something that we as a management team took very, very seriously. And as soon as we were informed around this, Navina, we took some very stringent actions at our end in terms of putting up a public notice, making sure that we file necessary complaints against all those parties highlighted, which were spreading these unscrupulous messages around the stock and the company. And whatever other actions were advised to us, we continue to take them in line with what's needed from a governance point of view. Now, obviously, given these messages that were circulating, the stock exchange has their own practices, and they're very clear about the way they manage it, and we are very supportive of that. I'm hoping that the whole idea of having these kind of investor calls, the whole idea, Navina, of having these kind of investor calls is that instead of relying on third-party messaging, a lot of people who are interested in looking at what we are doing can get that input directly from us on these calls. And so that is why we last 2 quarters have started this practice of sharing very openly our business model and our strategy. so that anyone who's either invested or is interested can directly engage with the management of the company. So Navina, I understand the concerns that you have, but let me please assure you that we are not indifferent to shareholders who've been very patient with their capital in the company. And all I would request you is to just track us with respect to what we are doing in our business and our underlying performance. And we are giving it our best of everything that we have to make sure that in this industry, which is offering a lot of growth, we can build something really relevant, impactful, and meaningful.
Yeah, thank you so much.
Thank you.
Thank you, Dilip. Thank you, Navina. If people have further questions, if you could please raise your hand or enter into the chat. There's a question in the chat then which I would like to ask. This is from Sandeep, an independent analyst. He has 3 questions. The first one being, the number of districts covered is not mentioned in this presentation. Are we still pursuing the strategy to increase the number of adhikaris in the same 708 districts? Rajesh, you?
Yeah. Rajneesh, you want to take up the question of districts and maybe you could touch upon the change in the government definitions and things like that.
Yeah, sure. So I think first to answer the question on strategy, yeah, definitely our strategy is very much, going deeper into more number of districts, basically deepen, as we've called out in the earlier presentation that we are present across 708 districts, which pretty much cover most of the districts of the country. And therefore our next milestone is to go deeper in every district. And the way we define depth is that we want to have one adhikari for every 1,000 rural population. So we are very much on that strategy. The reason we've not published the metrics is that there has been a reorganization of districts and PIN codes to districts over the last 1 quarter or so. And therefore we have to redo those, for an apple to apple comparison, we have to redo those metrics. And at the same time, we are also working on plans to actually define, our strategy is to go deeper right to the village level. The strategy is to be present in every village across all 600,000 villages and at block level. In terms of defining those metrics accurately, that is still work in progress. And as and when we are ready, we will definitely start publishing those metrics as well. Okay.
Thanks, Rajesh. The second part of his question is, in the split of GTV, are we not earning any revenue from the entrepreneur GTV?
So there is revenue from entrepreneur GTV, and therefore it is part of our total GTV. As we said, that the definition of total GTV is all transaction where there is revenue. However, the materiality of that revenue on GTV is quite small. So, for example, if I take a comparison of service fee revenue to customer GTV, which is I think about 40 bips. This one is very, very small. So, maybe around 2-3 bips. So therefore it doesn't really contribute significantly to revenue and hence margins.
Okay. And the third part of the question, which is the last question, is can you elaborate about the operating leverage that we are looking at? I believe most of our costs are front loaded, and once the flywheel starts working our bottom line would increase quickly.
Vivek, would you like to answer this?
Yeah, so like what we said, our operating leverage has been positive for the last few quarters. And also to make it very clear, all the costs that we're incurring today, none of them are capitalized. Everything is passed through the P&L. And most of the costs which we have incurred and which we will continue to incur for new investments will be booked to the P&L. So like what you said, it depends on the time period. Over a period of time, we will see the bottom line, show a much more positive improvement once the investment starts providing the returns. But at this stage, I think it is a bit early to comment in terms of how fast and how much the bottom line will increase, because we continue to make investments in new business areas and continue to scale up businesses in our focus areas. But I think the bottom line is that we are running a positive operating leverage business. We're investing for the future in a balanced way, and we hope to see the bottom line, remain positive over a period of time.
Thanks, Vivek. Thanks, Sandeep. That answers to your questions. If there is anybody else with questions, please raise your hand or enter to the chat. Otherwise, we will. Navina, your hand is raised. Do you have any other question, a follow-up? No, I think that's just since we have, we have another question from Darshan Diora. Darshan, could you please introduce yourself and go ahead? Darshan?
Sorry.
You unmute, yeah, thanks.
Yeah, this is Darshan Diora. I'm from Invest Capital. Just wanted to have a follow-on question regarding the operating leverage. So if I heard you right, you said that you haven't capitalized any of the investments?
Yeah.
And go ahead, sorry.
So when I said we haven't capitalized any of our investments, there is a very small portion which sits in intangible assets, which is very insignificant to the amount of IT spend that we have, which is basically some of the cost of software. But other than that, all the investments that we spend largely on organization, on IT, workforce and marketing all go through P&L.
Got it. And you guys spoke a bit about your acquisition strategy in terms of the adhikaris, and that you all have you all are giving, I think, the devices or the subscription, I think, at a discount, or you're subsidizing it. Can you just throw a little bit more light on that, and how are you accounting for that?
Okay, so there are two parts to this. So one is in terms of subscription. So previously, we used to charge a subscription fee to the adhikaris for signing up with us. Now we've completely made it zero, which means there's nothing that goes to the P&L. He doesn't need to pay anything to sign up with us. Now, in terms of devices, what we give, it is not completely free. So it depends on, because various services have various devices. So the way it happens is that based on what we procure from the market, we basically add a small margin for basically to cover our logistic costs before we sell it to the distributors and to the adhikaris directly. Having said that, the way the devices accounting gets, so there are depending on the nature of devices, the accounting nature differs. Some devices basically are whatever is the cost of procurement of devices is accounted as fixed assets, and whatever we sell to the adhikaris is basically accounted as acquisition revenue. In case of some devices, we depreciate the devices over a period of around 12 months and also defer the revenue recognition over 12 months. These are all for the new devices that we've gotten. For the old devices, which we are slowly easing it out, it is assets, and then acquisition revenue gets booked in the revenue. And then, having said that, there is also one scheme which we run for our MATM product, wherein while the device is billed to the adhikari upfront, there is a scheme for him where he will be able to recover the cost of the device through his performance. Basically, if he's able to achieve a certain level of threshold, in terms of GTV, we will be returning back 1/12 of the device cost to him every month he achieves the threshold. So there is a way of giving back to the device cost to him.
Just to get an idea, what is the, I know you said there are different devices for different functionalities, but I'm assuming predominantly it will be a biometric device, right? The adhikari is probably using his own mobile phone. And right. The main thing is for Aadhaar-enabled payment, you need to identify the person by using a biometric device. Right. So what would be the average cost of these devices that you are...
Around 1,300 rupees to 1,500. It keeps changing.
Okay.
Yeah.
Got it. So just to get an idea, like in a quarter, I mean, I guess now the pace of acquiring the adhikaris is going to still be very high, or is it the year-on-year, the quarter-on-quarter growth is going to keep reducing?
No, we would like to believe that the pace of acquiring adhikaris will at least maintain to the current run rate, if not higher. So that we expect the momentum to continue.
So how much would you be spending on these devices every quarter, and how much are you recovering from the adhikaris?
So basically, in a month, we basically acquire about 40,000 adhikaris. So 40,000 into 1,500 is the cost. So it's around 60 lakhs costing on the devices. And then obviously, we can't basically, and on 60 lakhs on each of the device, we make around 200 to 300 as margin at a high level, which is what we account for as acquisition revenue. But having said that, we have robust planning for devices, wherein we ensure that we procure stock based on the business projections, so that not enough cash is locked in the business. And the runway for us to get the devices is around 15 days. So we plan for that in advance and then acquire the devices and then roll it out to the market.
Okay. The last question was on the service revenue. Just to understand, the bulk of the revenue, is it being driven by micro banking services, like the transaction charges for someone doing a remittance, etc.?
Yeah. So bulk of the revenue, if what I believe what you call as micro banking services is basically services like AEPS, MATM, right? So yes, AEPS, MATM, and DMT, and now the new introduced product, cash management services drives bulk of the service fee.
And do you all also act like a BC for opening new accounts, or is it mainly the servicing existing accounts?
Current model is basically servicing the customers for transaction needs.
Okay, so you're not acquiring customers for banks. You're not.
Not right now.
Okay. All right. Thank you. Thank you. It's very helpful.
Yeah.
Thank you.
Darshan, direct. Yeah. Thank you, Darshan, for your question.
Yeah. Thank you, Darshan. If there's anybody else, if there's any other questions, could you please raise your hand or place it in chat just now if there's any other questions? Darshan, I guess your hand is still raised here, but you're done. Yeah. Okay, we have no further questions. Dilip, if I could request you to just make your closing remarks, please.
Yeah, thank you. Thank you, Gavin. Thank you, everyone. Rahul, Chiku, Rishu, Navina, Sandeep, Darshan, for your questions. I'm sure that there might be other questions that may come to you as you further look at the business and try and understand what we are doing and evaluate the opportunity. Please do reach out to us. As management team, we are very much available at any time. To answer your questions. We are at different stages of build out in our different platforms under Digispice Technologies. Each of the business segments that we are building, we continue to work on product market fit and identify spaces where we can see significant headroom for growth, and we'll continue down that philosophy. At Spice Money, which is our fintech business, we believe that we have a unique opportunity to serve the needs of the rural consumer. We are building out an asset-light, positive unit economics business model there, and we hope that the operating leverage benefit will be available in times coming forward. So thank you so much for your time, your patience, your attention, and we look forward to staying connected. Thank you so much.
Thank you, everybody.